Hi, Nikki Scevac. I'm the co-founder of Blackbird Ventures, and we're a venture capital fund in Australia. We're a $26 million fund. The idea behind Blackbird is founders helping other founders. So the founders of successful technology companies have invested their own capital, but also their own time to help out the next generation of startups succeed in Australia. So that's sort of the founding principle of Blackbird. I've done 2 startups myself. Used to live in New York and then moved back to Australia about 5 years ago. I started to want to angel invest my own money, which led me to form StartMate. So StartMate is an accelerator that helps 2 or 3 people with an idea get started by investing $50,000, helping to launch their first product and win their first customers. Through that experience, we've invested in 29 startups. And then early last year, led to the creation of Blackbird, which is the larger fund, so a $26 million fund, to really help startups at this slightly later stage. So after they've figured out that they're solving a customer problem, after they have a small amount of happy users, how can they scale it up into something that's really, really big? And so Blackbird is a venture capital fund, but behind it, sort of that core principle of founders helping other founders and helping people in Australia build a company that's the best in the world, not just the best in Australia. So I was doing university in Sydney, a small course called BIT. It was sort of half computer science, half commerce. And in that same course was Mike Kennebrooks, who founded Atlassian. So he and I were roommates, good mates. And we dropped out of university to start a company called the Bookmark Box. So this was back in 1998. When you had a work computer or a library computer or a home computer. And the Bookmark Box allowed you to manage and share your bookmarks online. So wherever you were, you had your bookmarks readily available. It was also a very crazy time in that we'd raised a small amount of money from my uncle and his dad, had some initial success. Companies in America were raising $20 million in a Series A on the back of a PowerPoint deck. And so a year later, from founding the startup, we decided to sell that company to a New York-based company called Blink.com. And I guess that was the entryway or the into entrepreneurship. That was the way that I knew that this is what I wanted to do with my life. From there, moved to New York and founded a real estate site called Home Thinking. So Home Thinking allows homeowners to choose a real estate agent based upon their sales history. So a quantified way of measuring how good a real estate agent is. Homeowners, like the Yellow Pages, would enter in their locality, and a list of real estate agents ranked by their sales history would be returned. Yeah, it was nearly 2 years ago that I heard about Bitcoin. It was actually the New Yorker article a few years ago that explored the identity of Satoshi. So it was tried to work out who amongst all of the world's cryptography experts could be Satoshi, and the history of Bitcoin. And that was really the rabbit hole, or the first step down the rabbit hole. And after reading that article, I just remember in the next 6 months, I think I read every single thing I could about Bitcoin, academic papers, every article about it. I think at the time it was just had gone from $3 to $32 and back to 15 or something in the order of that. And it was a catalyst. It was the snowball at the top of the hill that just got pushed down and got bigger and bigger over time, and really fell in love with it. Played around with it personally. As an investor, you're looking for who can create a wonderful company over a long period of time. And so our first investment, CoinJar, happened in the second half of last year. So it took us about a year to really find the right people in which to invest in. But we're at the very, very beginning of this long, long journey of an industry being created. So I think for the next decade or 2 decades, blockchain-based investments will be a very, very large and attractive opportunity to invest in. Yeah, I think there are tremendous parallels, and obviously Mark Andreessen highlighting some of them. I think the parallels for me, so the internet came out of this academic community that when people processed online commerce payments, there was outrage that someone would use the internet for a commercial medium. And Bitcoin is sort of rhymes with that sort of born out of a very political view of the world and very rapidly becoming a mainstream application. So people who aren't so much interested in the libertarian aspects, aren't so much interested in some of the underworld activity that obviously it can facilitate. And obviously with the internet in 1995, the industry that I guess adopted it the earliest was pornography. In Bitcoin, it seems that the gray industry that has adopted it earliest is drug dealing. So you have this very kind of complicated, politically motivated early adopters who are very strong-willed about what the internet or what Bitcoin is. You had these gray area industries like pornography or drug dealing that pioneered the use of both of those mediums. And we're really at that day zero, so that browser moment of the internet's history where it became mainstream for consumers to be able to use. I still don't think that Netscape moment has happened in Bitcoin. I think if you look at some of the browsers before Netscape, Lynx, which is a text-only browser, Mosaic, Cello, these are all browsers I remember. I feel like there are browsers available, but there is not a Netscape moment that has struck Bitcoin as yet. Yeah, I think, paid content, credit card payments online. So it's easy to forget the assumption that people were very afraid to put credit card details online. People were very afraid to transact over the internet. And I think obviously there was a step forward with that industry making it normal for people to put in their credit card online, technology-wise, so websites that don't crash. They were pushed to the limit in terms of usage and video streaming and so on and so forth. So the technology behind websites of scale back then pioneered a lot of the technologies behind operating a website. So that would be two examples. I think also a useful way to think about it is what has credit cards stopped? What kinds of transactions have credit cards prevented from happening? And if you look at the credit card fees, it's a 20 to 30 cent fixed fee plus 2 to 3% of the transaction size. And so of $50, $100, that fixed 20 to 30 cent component is negligible, so people forget about it. But for transactions like $1 or less, that 20 to 30 cents is a significant component of the transaction. And so if you look at Google and Apple and what they have opened up in terms of 99 cent payments, they've created tens of billions of dollars of transactions that occur each year. They eat the credit card transaction costs, but 99 cents, you can't charge anything less. And so what are transactions that are 20 cents and less? What are transactions that are 2 or 3 cents that can occur now in a world of cryptocurrency that could not occur in a world of credit cards? And one area that's really, really fascinating to me is this activity on Reddit where people are sending 2 or 3 cents at a time to each other in appreciation of a link posted or a comment made. So you start to see the beginnings of transactions that could not have happened previously that can now happen. Another interesting area where people are watching other people play video games on twitch.tv and contributing and tipping really small amounts of money to that person playing the video game. Again, with the friction of credit cards, the cost structure, the 16-digit number, the expiry date, the billing address, all of the friction points associated with pulling out your credit card for a very small amount of money prevent transactions from happening. So what are the transactions that could occur that never could occur? I think that's really an area that is an exciting space. I think they have to have a. I always say Blackbird, we invest in the two shits team. So they have to give a shit about the customer. Why do they care about that particular customer and their problems, and what problem are they solving, and why do they have the empathy to solve it in the best way possible, and can they get shit done? So in startups, you don't have a lot of money, you don't have any structure, you don't have a neat way of looking at all of the information. You have very little information in which to make decisions. You have very little structure, you have very little money. So who are the people that can get stuff done despite all of those constraints? So you're looking for people that can get stuff done very quickly on minimal amounts of money and have that very dogged spirit to fight on through. In terms of Bitcoin companies, like any other startup, the 90% question is this a team in which to achieve the goal of the company? Why are these people going to succeed? And then I think there are Bitcoin startups in 2014, but very quickly there will not be Bitcoin startups. It will be remittance companies, it will be microtransaction tipping companies, it will be non-financial, it will be decentralized DNS companies, it will be decentralized storage companies that have at their core Bitcoin's architecture, the blockchain, so on and so forth, but they've used that to create a more elegant solution to an existing problem. So whether they mention that they're a Bitcoin company or not, I think is secondary to how elegantly they've solved a real world problem. So more and more, I think as Bitcoin gets past the general infrastructure layer, that general swapping fiat currency for Bitcoin and being able to store Bitcoin safely and spend it easily, I think once you get past that infrastructure stage, there will be no more Bitcoin startups. There will be companies that solve these pre-existing problems in a really elegant way through Bitcoin. Yeah, I mean, just the fundamental premise of not needing to trust someone in a system, to have a public ledger of all activity that is audited or can be audited by anyone, is such a powerful concept that has so far-reaching consequences, not just financial services, but contracts or people owning goods and services and reselling them and maintaining ownership of whatever digital or physical asset, allowing systems that don't require a central authority. These are all so powerful and so stretching of the imagination, but this is the fundamental innovation of Bitcoin. Yeah, it has so far reaching consequences that I don't think it is just financial services. Just like the internet has not just disrupted travel agents or has not just disrupted a certain segment, it's far-reaching in its implications. I also think that people being disrupted have to be complicit in that disruption. They have to actively put their head in the sand. They have to be actively addicted to a certain way of doing business, or they have to be unwilling to change previously really profitable ways of conducting their business. And so there are two elements in disruption, or two partners in tango. One is the disruptor, and obviously the technology enables the disruptor to compete on an angle which is valid. But the second is the person who is doing things in an old way being unwilling to change that old way of doing business. And so if the existing person can get past that generational challenge of disrupting themselves with low-end products and changing the way they do business actively, not proactively, proactively, not in reaction, then they can succeed too. Technology is a platform or a canvas in which to paint a picture, so they can just as easily and actually have more advantage in using that technology. But the stories through history are that they cannot bring themselves because they are addicted to old ways of doing business. I don't think the price of Bitcoin is interesting. I think having a higher price is in general better, but I think it's the metrics around the price. So the volatility being lower than what it is, the number of transactions that occur each day skyrocketing, not staying flat like they sort of have been in the last 6 to 8 months. The quality of transactions, so the not the gambling Satoshi Dice transactions, not the I want to buy Bitcoin because I think it's going to go up next week transactions, the true transactions of using it as a medium of exchange, of buying goods and services, and transacting with others and keeping the proceeds of that in Bitcoin and not converting it to fiat currency. So what I care about is rising transactions of a good quality. What I care about is merchants or people receiving Bitcoin and the percentage of people not converting it into fiat currency. So at the moment, it would be near 100% of merchants converting Bitcoin into Australian dollars, US dollars. That number has to come way down. So for Bitcoin, the network to achieve that escape velocity. So those are the metrics that I think are most important. The quality of transaction growth and the ecosystem not converting back to fiat currency is two indicators of the health of Bitcoin. Yes, and that's the other thing is the idea of Bitcoin in this frictionless, low transaction cost system are true to an extent. It's not zero fee. Bitcoin transaction fees are not zero, they're something. And also as that mining pool and the rate of Bitcoin issuance natural to the protocol comes to an end, and being able to pay miners for their service of securing the network, there is a real cost of transactions. And so particularly with those microtransactions, a few cents, those are currently happening off blockchain. A lot of Coinbase's smaller transactions happen off blockchain. So there's this awkward moment in the development of Bitcoin where this great computer science breakthrough meets this uncomfortable reality of trying to do things in 2014 that make sense. So Bitcoin has a long way to go to solve all these problems, and a way to incentivize the security of the network while making the transactions ultra low cost. It's not there yet, and hence a large amount of off-blockchain activity. People have always paid to have others do what is inconvenient for them. So people pay for the convenience of someone securing their property. So people pay for the convenience of systems that allow them to easily exchange cash or money or so on and so forth. So people are willing to pay for companies, for people to help them make their lives easier. So yes, it is another layer. But that's not a bad thing. That happens in every corner of life, is people want to have others make their lives easier. What is exciting with Bitcoin to me is you don't need permission to compete on that layer. You don't need a huge capital base to become a bank in Bitcoin. You don't need a huge regulatory oversight currently to be able to try and compete at that bank layer. And so I think it's you don't need permission to start. That's the real innovation of Bitcoin. If you want to solve a financial services problem today, you can just go and do it. You don't need the permission of banks. You don't need permission from Visa or MasterCard. You can simply go and try and do it and make it work on your own merit.